For a living.
Okay, we start our afternoon session and welcome back from lunch. I hope that you have enjoyed a very fruitful and informative lunch discussion with your fellow members here. And I believe that you will not feel sleep because of our distinguished speakers here, and also because of the topics that we are talking about, is the changing landscape of bank finance as the main capital provider to shipping. And you see from the panel members that we have 3 bankers and financiers from the traditional banks and also the new shipping financiers. And also, and more importantly, I would say that we have one from the ship owners, Peter. So I probably would like to start with Peter first, because from my perspective that, like me as a lawyer and also like bankers and financiers, that we are all providing services to the ship owners. And ship owners are no doubt the principal stakeholder of shipping industry. So the shipping, as we have heard a lot in the morning, that the shipping is still in the challenging times. Ship owners for a doubling of cargo volumes by 2050, assuming a conservative growth of 2 to 2.5% per annum, whilst cutting emissions at least by half until the same time to 2050. So therefore, people say ship owners must find alternatives to the fossil fuels that have provided their ships for most of the 21st century. And there's no time to waste considering that ships need at least 20 years of life to pay back the investment costs, and that the requisite technologies do not yet exist at acceptable costs. So I'd like to ask Peter first that how should the industry go about meeting this challenge from the ship owner's perspective? And also, when you accept the investment from the bankers and financiers, what is the first or primary concern? Yeah, please, thank you.
Thank you, Edward, and thank you for giving me such an easy question to start off with. I mean, 2050, obviously, it's a long time away. But you're right, we kind of have to start thinking about it today because we have our first sort of hurdle already in 2030, and that's only about 10 years away, where we have to become much more efficient per ton mile than we are today in order to reach the ultimate target. But the issue, that we're facing today is we don't know the path to get there, because we don't know what technology will ultimately prevail, or if it's one or several technologies. There's obviously a lot of discussions going on at the moment about how we can become more efficient, making the ships slightly cleaner and more efficient, etc. And I know there were discussions overnight in the IMO about speed limits, which doesn't seem to be happening, and other things, right? So there are a lot of things going on, but we don't know today what the ultimate technology will be, so we cannot plan for it, right? It will become clear over time, but the thing that we do as a ship owner, and I can speak for Pacific Basin, the way we manage this risk today is that we focus on buying second-hand ships, right? Because you're quite right, if you order a new build ship today, you will have it trading in about 2 years from now, and then you have 25 years of depreciation on that vessel. So you're taking a 27-year bet on a particular technology. And if you order a ship today, whether it's in China or whether it's in Japan, I'm talking from the perspective of dry bulk, it's still optimized to run on heavy fuel oil, right? So it's not, it's not a technology of tomorrow. That fuel oil will be phased out in a month and a half, and it will be illegal in about 4 months' time. So the way we handle this today is we do not order new builds. Right? It's way too risky, and I think as we get closer to these various deadlines, whether it's 2030 or 2050, the life of a ship will start to become shorter. Right? We need to earn a return on a ship much quicker than we do today, because the technology that we're using at some point will become obsolete. Right? But it's challenging because we don't know where that will be. So from our perspective, we focus on second-hand ships. We focus on ships when we invest and grow our fleet of age 5, 6, 7 years old, gives us much more time to earn a return on that investment, apart from costing much less, of course, than a new build, and it's much less residual risk. That's how we handle that today. But I wish I knew the technology that's going to be future-proof in this greenhouse gas emission reduction. If I knew that, I probably wouldn't be sitting here today, right?
Yeah, I believe so.
Yeah.
And very good start, I believe, that for kicking out our discussion. And then I turn back to the bankers and financiers that actually probably we can start with an overview from the traditional bank, that's Shreyas, that on the previous year and what you see for the year to come. That how would you sum up your this year, because we are already in November, and what do you expect in next year, both for the shipping finance market and also the shipping, I mean the cargo market, and that would be influential to your decision on your further investment, right?
So thank you. So I hope everybody's got 3 hours to sit and listen to me describe the full year. Look, the fact is that within shipping finance, the year has been a mix of essentially traditional ship finance and also some very interesting non-traditional financing aspects. At Citi, when we talk about shipping, we're also talking about offshore, we're talking about terminals, and so a lot of infrastructure type projects. And if you look at what global trade has been doing over the last sort of 10 years since it took a dive in 2009, it has come back, obviously, but there are many well-known threats to the stability of global trade. Not everything is in the control of ship owners, and so we must ride that out. For a financing firm, ultimately it is the stability of cash flows that matters. And so whether you're looking at a terminal, a dry bulk vessel, or a tanker, or a LNG carrier, you're still asking this very simple, basic questions that my predecessors as heads of shipping have asked since time immemorial. How are you going to pay me back? And if you don't, what am I going to do with this collateral that you're supposed to be giving me the keys to? So that has not changed. And I think 2019 was simply another year where more of that took place. Now, we are at a point of great flux, I should say, for the industry. Everything that is happening within the green, let's say, initiative, and whether you want to also throw into that generational change within the ship owners and the corporatization of shipping companies, the push towards public capital markets that some shipping companies are focusing on, all of these things indicate that shipping is coming more into the mainstream sort of corporate flow. And what that means is that the greater responsibility that's going to emerge for the shareholders of these companies is frankly going to be brought to bear with things like activist shareholders and environmental activism and consumer awareness of what shipping does. The core problem of shipping is that we haven't had a link between the value that shipping adds to the world economy to what consumers see on the shelves in the supermarkets and how it affects their daily economic life. So once you make that connection, once you see that the shipping is an indelible part of the global logistics world, we should see some improvement. But that story is still emerging. We are maybe 5-10 years away from it. So 2020, I think, is going to be another 2019. We will have some interesting outcome of the IMO 2020 regulations, low sulfur fuel, and the resulting potentially complications that arise from it. But we will ride it out as we have always done. And I'm sure that we will find some stability towards the later half of the year. But these are volatile times for global trade and for finance, and that will continue.
Okay, thank you. How about Bill? That any comments? Because we know that ICBC Leasing has been very active in the shipping finance market, and any views?
Yes, and thanks for your invitation again. So 2019, I would say, is a challenging year in general, not just for the shipping, also for the global economy, also in China. So I'm saying the China economy has been slowed down a little bit, and but still faster compared with the rest of the majority of the economy and the countries. But consequently, also impact the shipping. And in the beginning of the 2019, and people worry about the dry bulk, worry about the NG, worry about the container. But now, in the end of this year, when we look back, we find out, okay, dry bulk not that bad, NG is still booming, and the container a little soft, but they're still okay. And the tanker, surprisingly, due to China, some organization is a historical high compared with 20 years ago. So it's everyone feel like, oh, this year is an amazing year. And last month I went to the Greek and meet some Greek ship owners. Most people are very happy because they make a good profit in all kinds of the shipment, so and the segmentation. So in the 2019 was a surprising year, I would say, in my opinion. So because people feel like it's a lot of a challenge, it is a lot of challenge because of the new regulation going to be implemented in 2020. But the result, from the economy perspective in the shipping, the result actually not that bad. And so now we talk about the 2020. It's only like 2 months left to be going to in 2020. And would be another good year or surprise year or maybe another encouraging year. Nobody knows, but we do know that the new regulation we're going to implement in early of 2020, and we have to look back all the shippers who has the financial relation with ICBC leasing. We just ensure they have the money either to pay for the scrubber or they have the money to buy the low sulfur. If they cannot to support either of this, they have to to give back to the ICBC leasing, which we don't want to see this. So I have to, for the last 2 months, in my team, we are very busy to talk about all the shippers and in the world say about, are you okay for 2020? Do you have enough cash flow? But I think in 2020, the most important thing is about the cash flow. It doesn't matter what kind of solution you're looking for. Some people are looking for the LNG, some people are looking for the, scrubber plus the high sulfur, some people are looking for the low sulfur. Doesn't matter. Just look at your balance sheet, look at your cash flow, ensure you have money to pay back the banks, especially to ICBC leasing. Thank you.
Thank you. Thank you. We talk we talk a lot about 2020, the next year, but let's look a bit beyond the next 10 years, for example. That will finance, Eric, I would like to put this question to you, that will you think the finance will be more accessible to ship owners in the next 10 years? That the banks, like we know that banks, the panelists have all survived the last 10 years, right? From even the shipping market was not really good. But how do the banks view their next 10 years in shipping? Eric.
Oh, thank you very much. This is Eric Yang from AVIC Leasing. I think AVIC Leasing is one leading house in China, and we have the unique aircraft manufacturer background, and aircraft and shipping is our core business in our portfolios. To answer your question, it's not easy to survive in the last 10 years because it's a difficult time in shipping industries, and we got lucky. First, lucky we established relatively late in 2010. Second is we strategically choose not to involve in any offshore deals in that hot topic years of offshore deals. And now that's why we are here. The whole fleet is very healthy, and we heavily invest in last 3 years because we believe it's the bottom of the cycle. It's the right time to enter. I think the most important thing is luck. I think no matter what you did, you still need some luck to invest in the right timing. For the next 10 years, I still believe luck. We still need luck to around us. The next thing I think important is you should be open-minded and be innovative because it's a changing world. Even as Bill said, the beginning of this year and the end of this year, their opinions are different, and people have different opinions in different segments. Maybe next year we may have different strategies to invest compared to this year's. So I think the more important things to survive in the next 10 years, you should be innovative and more creative.
Yeah, thank you. Let's talk more because you see that our panel topic is about the changing landscape of bank finance as the main capital provider to shipping. So Peter, when I raised the first question, you said that the question was simple. So let me raise a bit harsh question, starting from you. Actually, it's more harsh, I believe, for the other three members. That do you think the diversity of the shipping finance providers is good to the ship owners? And from the ship owners' perspective, when you consider borrowing money, whether you would like to go to the traditional banks or to the new financial providers, and do you think the traditional bank shipping finance will, I would say, disappear in the next 10 years, actually?
Yeah, so I mean, I'll speak perhaps not on behalf of Pacific Basin, but sort of more in general. My view is that shipping does not generally benefit from too much finance, right? And we've had periods where there has been too much money floating around being offered to shipping companies, and the result of that is always the same thing, which is over-ordering, right? And which kills the market. So I don't think that too much finance, too many options is necessarily a good thing, right? Of course, as an individual ship owner, it's always nice to have a lot of options. But from a macro perspective, I think shipping has had too much money and it's been too cheap, and that I think will change, right? I think the traditional bank ship finance model is likely to become a smaller and smaller part of ship finance. And I think banks will look increasingly at the corporate credit as opposed, they'll want their security, of course, why wouldn't they? But they will look at the corporate credit more and more. They will want to see what kind of company is this, what's their strategy, what's their track record, what's the quality of the management team, all these things that is common in other sectors. I think that will be the way the bank market will evolve over time. I think it's good to have other alternative sources of funding, but as I said before, as long as it doesn't lead to new ordering, because that undermines the overall market and the health of the credits ultimately. But I think as banks become much more picky, I think what will happen, and I think what will need to happen, is that all the other providers of finance will also need to become more picky, because you can't have a situation where alternative sources of funding starts a race to the bottom for credit, right? And that because then you're picking ultimately you're picking losers, frankly. So I think as the banks starts moving towards more relationship banks, led corporate lending, so will all the other providers of finance over time. They will have to do that as well. So it will mean the overall finance quantum will be reduced, and that is not necessarily a bad thing.
Yep, thank you. And Shreyas, how about any comments from the traditional bank's perspective?
Given I'm the only traditional bank on this panel, I think every time people say, the bank landscape is changing, what's going to happen? Basically, that question means, bank, you are going to die. Everybody else is going to take your business. So no, in 10 years, I don't think we're going to go anywhere. I think we're going to be around. The fact is, and I think we heard the number earlier today, $100 billion of new financing required to replace ships, etc. There simply isn't enough appetite or interest in the wider capital markets to pick up that kind of shipping risk, frankly. And you need specialized skills to analyze shipping risk. And the specialized skill lies in people who are sitting on this panel, for example, and their teams. So we need to make sure that first of all, that topic is taken off the table. I think to Peter's point, as there is more corporatization and people looking at more of the corporate level balance sheets, there will be, after some consolidation in the next 10 years, I think there will be large enough corporates that can address the capital markets and share some of the burden of capital allocation from the bank, take it away from the banks. And as banks, we are more than happy to have that, because we would rather have a small balance sheet and a nice fee income from doing those bonds. So this is obviously something that works for us. But I think we're still very far away from that. I think we still have a period of volatility ahead of us. We have IMO initially, and then we have environmental activism. We have the prospect of lower oil prices, even lower than where they are today. I mean, it's a natural result of electrification. The way that the auto industry is moving, so will the transportation industry move in due course. But if you look at sheer numbers, we use 97 million barrels of oil a day. About 40 million, and the number is debatable, but 45 million of that is in transportation. And if you just dislodge 10% of that over the next 8 to 10 years, that's 4 million barrels of oil a day that could go into electrified transportation. And remember, in 2015, when the oil crisis happened, it was because the dislocation was 1.5 million barrels of the dislocation between shale and Saudi oil. So we have some volatility ahead in the hydrocarbon space. And I put my hand up earlier as pro-LNG, and that was simply because I would like to see LNG develop as a solution to this dislocation that is coming in the oily, sort of black oil sector. And I think the social thing to do would be to develop LNG as a transition fuel, just because we will have this dislocation coming up. So there are things to be concerned about, and I think, like I said, the best place to analyze these kinds of things is not the capital market, it's within the bank and leasing companies who understand this risk.
Yep, thank you. Bill, from my perspective, actually, ICBC is standing in the middle, right? That ICBC, on one hand, is a traditional bank, but on the other hand, ICBC Leasing is definitely a new financial provider to shipping. So from your perspective, what you see the difference? And when you are sitting in the middle or standing in the middle, that whether you see the advantage and disadvantage when you are talking to your clients about injecting fundings to them.
Okay, thank you. It's a very tricky question because hardly I cannot speak on behalf of the ICBC Bank, but I try to speak on behalf of the ICBC Leasing. I think also there's other China leasing house and sitting here. In the past 5 years, I already explained in the previous panel, and the reason for the China leasing house and increasing, raising very sharply, and because China banks do have the capital on hand, but the problem for the shipping finance, I also answered the question. You need like the industry background. Also, you need a very special technique to really run this kind of financial model. You can't get someone who has no shipping background, just come from purely the financial background to run the success model, which has been proven not to be successfully. That's why I'm saying the ICBC Bank itself built up the leasing house and dedicated in the shipping side, the sectors, because they got some kind of the combination, not just banking background people, but also the industry, shipping industry background people, work together. I would say the shipping finance is very special, the finance industry. You need the very strong cooperation, not just of, purely the banking background, but also you have the lots of technical background, but also you have to understand the global economy, also understand about the whole, I would say, the legal issue. Right now, most important about the regulation issued by the IMO. Right now, we have about $1 trillion and shipping asset. It could go to zero if, IMO said about no ship without ING could run on the water. Then suddenly all this kind of old ship and old model would be, the value itself would go to zero. So I would say for the ICBC Bank, also ICBC Leasing, internally we're working very closely, because the good thing for us, we have all, hundreds of offices around the world, which can be our ears and eyes to help us to really touch the local global customers. But on the other hand, we also can support the local banks to really to understand the local customers as well. So that's why there's some news already published. ICBC set up the new office in Greece, and with another Chinese bank as well. So it's the first Chinese bank set up in the Nicholas and the hometown in Greece. And leasing also, of course, will be very quickly the step into the new country as well. So I think that's the main reason. I think for the already explained, in the next 10 years, I think the leasing capital, also the banks, maybe also I would say the private equity, they'll have to work together, to support this, I would say, the very dynamic, also very technical required, the shipping sectors.
Yeah, thank you. Eric, how about you? I think that you've probably not denied that AVIC Leasing is a pure new shipping finance provider. And when you, what is your, from your perspective, what is your selling point when you compare with, for example, like Citi and ICBC Leasing, that how you could persuade the ship owners to choose you for getting the shipping finance to get the investment?
Oh, thank you very much. I think first, I think there's not so many competitions between us. The room is big enough for everybody. And when the traditional bank leave some market, then we will fill the market. I think it's good to think about that way. And because we don't have, let's say, bank background, so it's not easy for us to also get money fundings from the capital market or from the banks. So that's why we have a very good relationship with the banks. Our 60% of our debt are long-term debt. Most of them come from the Chinese policy banks, international banks, and the bond, the capital market. So I think it's a good way to cooperate with them, not to compete with them, because we are in a different market positions. We are positioning ourselves in differently with them. We are the leasing house, take care of the small to medium-sized ship owners in the market. And we did a lot of deals in Greek market. So I just want to show you we are different. There's not so many competitions between us, so we can work together to provide the financial service to our clients.
Yep, thank you. Since that we are based in Hong Kong now, this forum, so let's talk a bit more about Hong Kong. And the first question about Hong Kong I'd like to put to Bill, actually. The reason is because 2 years before, then when I was also a delegation member together with Hong Kong Shipowner Association, we paid a visit to ICBC, and we were warmly received by ICBC as well. And at that time, there was a tax incentive launched by the Hong Kong government for the aircraft leasing, and not yet for the shipping leasing. Of course, we are still waiting for the ship leasing tax incentive. At that time, the president of ICBC said one word in Chinese that 万事俱备，只欠东风. When we ask about when ICBC Leasing would set up your office in Hong Kong for doing the shipping finance, and the bank had said that everything is ready, just waiting for the tax incentive. And you would recall that actually last year in the policy address, the chief executive has already said that Hong Kong government is working on the tax incentive for the shipping finance. And do you think that is really important for you that it really makes sense for saying that everything's ready, just waiting for the tax incentive? And if that can be done quickly, hopefully the end of this year or the next year, do you think it will attract a lot of shipping leasing companies to set up, not only ICBC, of course, but also the other ship leasing companies to set up in Hong Kong? And is it possible for Hong Kong to amplify the effectiveness of this tax regime with the Great Bay Area that we know that everyone talking about Great Bay Area in here, and also Hong Kong want to play an important role in the Great Bay Area. And also the advantage, I think, from the shipbuilding and shipping finance perspective is that Guangzhou is one of the major shipbuilding venue in mainland China. So is that really also the reason why you would choose Hong Kong as your base for doing shipping finance? And how, of course, the later question will be for Peter, that how are ship owners and managers going to benefit it from it? Even I know that you said there are probably too much money in the market, but on the other hand, of course, that more options would be more opportunities. And probably start with Bill first. Thank you.
There's a lot of questions from Mr. Liu. I think it's just summarized to one question: why is Hong Kong important? And it is important, no doubt. And but those questions actually pretty high level and should be answered by our CEO. Since I'm here, I just try to answer the questions mostly from my personal opinion. And I try to share more information from the public medias. And some information already being discussed and but hadn't been officially announced, so I have to kind of be shared right now. But first of all, ICBC Leasing is the first and the China leasing house set up the subsidiary and the company in Hong Kong for the aviation leasing. That's why I come with the latest this morning, because I went to our aviation office, not far from here. It's in the center, within the ICBC tower, very nice tower. It's not owned by the ICBC Bank, but with the branding said ICBC Tower. I assume the people living in Hong Kong had visible for this tower, next to the Citi Tower. And so we have the half floor and pretty nice office and good view. So which means we already physically been in Hong Kong since 2 years ago, and we have already about 10 people and sitting in the office and working very hardly. But for the aviation side, right now only. But we do have the plan, to have our similar structures and for the shipping side. And unfortunately, due to the today's situation in Hong Kong, so our process had to be slightly slowed down a little bit. But I think by the end of the year we should have something come out and in our Hong Kong office. And the reason we want to have the office in Hong Kong because it's a global financial center, no doubt. The shipping never ever possible, and this linked with money. That's why we said about the capital link. We could always link together money and the capital, shipping together. That's why we choose the Hong Kong, because the Asia hub, and it's very easy to access the not just money but also all the media. I would say the lawyers, also the accounting people, all these kind of professional people can support the shipping function. The shipping itself, not just for the shipping, it's covering lots of things. That's why we choose the Hong Kong as the center, as our, the future sport function. Right now, I would say, I can't speak on behalf of other China leasing house, but for ICBC leasing, for the shipping side, we have more than 12 billion and assets in shipping, and it's already 90% of the business come from overseas, in the US dollar business. If we only sit in Beijing or Shanghai or Tianjin in China, it's very hard for us to, have the daily contact with overseas customers who use our capital in the daily running. We have to be somewhere, not just in Hong Kong, maybe also London, maybe also New York, as our step-by-step to have the easy access to our global customers, also for them have the easy to access to us as well. So that's kind of the consequence for us to step out from mainland China to the Hong Kong side. That's why it's very critical. That's very, very important. I think that the shipping is just for one industry. That's why I say Hong Kong is important, because for other industry, for the Chinese enterprise, for the Chinese company, they need Hong Kong because they need this kind of the window also for the step one to the overseas. So, that's why the reason. I hope that answers your question.
Thank you. And I have looked around, actually, there's no officials from the government. And if Benjamin Wong of Invest Hong Kong is sitting here, and when he hears about that you are slowing down the opening of your office, he should be very rush, and very action about to persuading you that you should quickly to take actions. And before I ask Peter to comment, I'd like to hear more about I believe that everyone would like to hear more about the views from Shreyas and also AVIC about this question, that whether you see Hong Kong is still important maritime financing, shipping finance hub, and what the benefit that you can get from for example, the Great Bay Area and also Belt and Road Initiative.
Sure. Unless Eric wants to go first. But look, I mean, what can I say? We've been here for over 100 years. So I think that itself is the advertisement for us being very confident of Hong Kong's abilities. I lived here 20 years ago. I worked in Citi 20 years ago, based in Hong Kong. And honestly, nothing has changed in that sense. Hong Kong's biggest competitive advantage is still its people. The energy here, the fact that it is, as Nicholas said, gateway to China, gateway to Southeast Asia, gateway to the world. I think it is a supremely important part of the Asian financial infrastructure. So Maritime fits very beautifully into that. Maritime is a global business, and Hong Kong has a global outlook. So for us, there is absolutely no doubt, no question about the importance of Hong Kong.
Thank you. Eric, do you expect the taxation incentive launched by the government? And if it is launched, what AVIC would do?
Yeah. Yes, I also want to highlight Hong Kong is very important. Yes, I think some of my friends pull out because of the safety concerns, but I think, gentlemen, ladies, you are here, I'm here. I think we have believing in Hong Kong's as harbor centers, financial centers. We already have a lot of SPVs, lessors established in Hong Kong, and with the vessels flying Hong Kong flag. I think we're already doing that. And we choose Hong Kong is not only the tax policies, but also the mature shipping financial systems, legal systems, and the financial systems, and the talents you can find all in aspects. So I think we are happy to see those tax incentives. We will get benefit from that, but that is not the only reason we choose here. In terms of the branch, overseas branches, I think I have to think about that, because it's the definition or the why we should establish a branch here is that functional reasons, because it's easy to access the capital market, easy to access the banks, international banks, or it's easy to access the shipowners. So we have to think that deeply, and maybe the next we will think about that, and maybe it's Hong Kong, it's the right place to choose as a functional center, not a headquarter, of course.
Yeah, thank you. Peter, let's, you start the discussion, and let's let you conclude the discussion. And you know that as the principal stakeholder of shipping industry in Hong Kong, that Hong Kong government has, since I think 2016, started to promote and facilitating the shipping industry. From the shipowners' perspective, what do you think so far has been done good? And any areas, any aspects that you think the Hong Kong government should catch up? And turning back to the taxation incentive, that whether you think that would be good for Hong Kong as a whole as a shipping center.
Yeah, I mean, I think we have been in Hong Kong for 32 years. We were founded here, and we've had our headquarters here for 32 years. We are very committed to this city. We have over 200 people here. We have 120 Hong Kong flagged vessels, which is we're one of the biggest owners of Hong Kong tonnage, and we think it is a great place to do business. So I agree with my esteemed colleagues here that Hong Kong gets most things right. It's very difficult to point to things from a business perspective that Hong Kong does not do very well. So we have no issue with the way they've implemented taxation and other reforms. I think they're doing it for the right reason, and I think it's helpful for any ship owner here. And in general, I think the government has been very, very helpful, and we're very committed to keep growing our fleet here in this city.
Thank you. Thank you very much. And we still have 1 minute, so I open to the floor. And any questions to ask? If there's no questions, I would conclude the discussion. Okay, thank you very much indeed, panel members. And also thank you very much for your listening. And thank you.
Thank you.